Hey everybody, I made about 12 points of profit today on about 2.5 points of risk shorting the E-mini S&P 500 futures by getting short up here at these 57.10.50s and getting out at these 56.98.50s with just about a 2.5 point stop at these 57.13s. So what I wanted to show you guys is what I saw in order to put this trade on and how I can share my information with you guys to help you guys take better reversal trades. So starting off, for some market context, we've had a nice, decent rally up the last couple of days, one dip that got bought back up, and today is FOMC day, so I expected the volatility to be lower today regardless. But basically, what I saw, I drew a volume profile from the cash open at 9:30 to current market price. My original plan was to get long in here where this low volume node was at current time, but that didn't work out. I never got a dip in there. So what I wanted to do was play a short back into this area. Now, what I saw on the order flow over here at this high, we saw this kind of curve over, and we saw a lot of volume being developed in here and a lot of aggressive selling. You can see all this red, all this selling. But what I noticed was that we couldn't break this high up in here. We couldn't break this high. So what I did was I got short right in here at these 57.10s with my stop right up in here in this very low volume area, betting on price to come back down into those 56.98s, where I saw a zero print on the bid side of the market that it remained unfilled at these 56.98.50s, which basically happened right up through here in this quick move up. ICT guys would call that a fair value gap that got tested. Well, guess what? It wasn't fully tested because there was still a zero print right in here at these 98.50s. So what I saw basically on this order flow was a lot of people started to get short in the market. And what I didn't entirely like about this trade is that this volume profile, as time moved on, as you can see here and here and here and here and here, you notice how all that volume got developed at the high? What that tells me is that there were a lot of people that were willing to do business up here. When you see something like that occur in real time, that tells you that the probability of a dip or, a drop in the market is becoming less probable than a break of the high and then me getting stopped out. So that's one thing that I didn't entirely like about this trade, but nevertheless, there was this low volume area that remained untested, and these 98.50 zero prints had to be hit at some point in the session because they typically do get hit. We had the lower VWAP confluence for a magnet down. We had the zero prints magnet down, and we had this overextension, which I wanted to play reverse, targeting that area and the lows. And I used order flow, the tape, the volume profile, and price action and key levels to develop this plan, and you can too.